There have been many changes in property tax over the last few years, and it's important to understand how these affect you as a landlord, and then use this knowledge to plot the best way forward. With such regular changes, it's important to learn, change and adapt to these. There is little doubt that in the UK, investment in property has unique physical appeal that cannot be matched by investing in the stock market and ISAs. The private rented sector has more than doubled since 2001, and this trend is predicted to continue, with more than half of 20 to 39-year-olds expected to be renting privately by 2025. Into this breach has stepped a growing army of buy-to-let landlords. Studies suggest, however, that more than 1 in 3 landlords do not understand their taxation obligations. With HMRC targeting those landlords who have never declared their rental profit, and the UK government clamping down on property as an investment in an attempt to control the housing market. The need to increase awareness by buy-to-let landlords on their tax position has never been greater. Whether you're an accidental landlord who has inherited a property, purchased a new investment, or even let your previous home to tenants, you must consider your tax implications and understand how these are reported to HMRC. As a buy-to-let landlord, you may face several taxes regardless of whether you own a single property or 100 properties. There are 4 main tax types that your investment in buy-to-let will incur, and these are stamp duty land tax, income tax, capital gains tax, inheritance tax, and corporation tax if you operate via a limited company. Stamp duty land tax is a tax you pay when you buy a property in the UK, so if you own your own rental property already, this will not apply to you. If you are purchasing a rental property, however, this can be a very large and sometimes unexpected expense that you should factor into your buying calculations. Stamp duty rates are set in tiers depending on the price of the property. However, there are some exceptions, such as if your property costs less than £40,000, or if you are purchasing a mobile home or a caravan. Otherwise, that's a hefty chunk out of your purchasing budget. Stamp duty is a capital cost, so isn't a deductible expense against your rental profit. It can, however, be utilised when you sell the property to reduce your capital gains tax liability. Income tax. Profits you receive from renting your property are taxable and must be declared to the HMRC. This is usually done via a self-assessment tax return. There may be exceptions to this, such as if your profits are less than £2,500, however you do still need to inform HMRC. The profit from your rental income is added to all other sources of income, and that total determines what tax band you will fall into. Landlords may deduct allowable expenses from their rental income, which results in their profit, and it is this profit which is exposed to a tax income. Allowable expenses are those costs deemed to be essential to performing your duties as a landlord. Allowable expenses are things you need to spend money on as part of the day-to-day running of your property business. And these include letting agent fees, legal fees associated with renewing a lease or evicting a tenant, accountants' fees, maintenance and repairs but not improvements, professional subscriptions and memberships of landlord associations, any services you pay for such as cleaning and gardening, and any other direct costs of letting, for example phone calls, advertising and visits to properties. Capital gains tax. If a landlord sells a property which has increased in value, then you may be liable to capital gains tax. Working out the gain you've made on the property is reasonably straightforward. You deduct the price you bought the property from the total you have sold it for. You can deduct costs such as agents or solicitors' fees and the cost of improvements. Capital gains tax is then payable on the profit. If you have made a loss, then of course no tax is payable. If you would like any advice on landlord taxation, please visit the Fife Property blog or feel free to contact me direct via social media. Please subscribe, like and share this post with others. Thanks for listening. I'm Richard Cook for Fife Properties TV.